Good day, traders. Now we'll come back again to the fourth Fantastic 5 Bistrah setup, which is called the Quasimodo continuation, in short form QMC. This is one of my favorite setup, and honestly is the most best setup if you can find one of this setup with the confirmation. So without further ado, let's get started to our class. Alright, the introduction to QMC. First, QMC is a trend continuation after a reversal has occurred. Normally, QMC is considered as a continuation, so it always happens after a QMR has happened, or it's the same line with the QMR. We will go further into details and have a look at the chart later on. So the QMC required the higher high or the lower low, which is the head of the QM, to be the second drive of the confluence trend line. And we only entry at the third trend line, which is the right shoulder, or we call it the entry point. Now the best to entry QMC is after the occurrence of reversal. So whenever after there's a QMR, it will come with a QMC. Please always take note that this is your chance, your high chance to enter a bigger load. Alright, so now let's go to the SOP for the QMC. This is a sell setup. As we can see here, this is how the price pattern looks like. So before the price comes back to this area, we can see there's a QM in this area. So let's mark the structure. We have the high low, higher high, okay, and the lower low. So we mark the trend line. The reason why we mark the trend line, remember, to have it to become a QMC, the high high of this head of the QM has to be on the second trend line. Okay, so this is the first drive, the head is the second drive, and then we mark the entry point here. This is our entry point of the left shoulder, and then we mark the zone from here to the wick for us to easy to monitor the zone when price come back in this area. And then price come back here, and then entry at the third drive, and then price continue to go down. So remember guys, the price has to follow the confluence to entry point. So what it means here is that when we have this confluence, when we have this entry point, the price has to come back to this area. Now we do not want when the price linger around here and then it has way past the entry point and the trend line. So when price come linger around like this, it becomes high risk. So we want it to be at the entry point at the same time the trend line is within the confluence. Okay, so if it comes here early it's fine, but as long as it's not late like this. So we do not want like that, yeah? And guys, this trend line, it doesn't have any specific as long it is within the confluence, the price of the confluence. So there is no such thing saying that it must be on this point to that point. As long as teacher always said, it is only T-buy. So means we can just use it just as a confluence only. It doesn't have to be the exact line or exact point. Alright, now let's look on the QMC SOP for the buy setup. As we can see here, there is a QM buy setup. We can see the low, high, lower low, and the higher high. At the same time, there is one support here, can make it as our confluence. So here we can see that this lower low, the head of the QM is on the second drive. Okay, the first drive, the second drive, and then we mark the horizontal line as our entry point. We mark the zone for us to easy monitoring when price come into this zone. As we can see, price come back here and entry at the third drive with the same confluence as our entry point, and price continue to go up. So remember guys, and always remember this, price has to follow confluence to entry point, and the second drive has to be on the head of the QM, and we have to entry at the third drive, same area with the entry point. As I said, same with the QM sell, we do not want the price to linger here too much and then over here way past the confluence and the entry point. It will consider as a high risk. So remember guys, as I said again earlier, this trend line, there is no specific point that you must do. Most important guys, setup first. The setup first. After you find the setup, only the last part you do is the trend line. This is just so that we know that there's a continuation setup with a trend line. It makes the price confluence more reliable. Alright, there are 5 steps to entry in chart for this QMC. It's very simple, isn't it? So the first one, remember we always have to find the setup first. So draw the entry point using a horizontal line at the left shoulder of the QM. Second thing, mark the zone for easy monitoring. Thirdly, only you draw the trend line. We're using the T-bar style. Means it's only as an act of a confluence so that we know that the price of the confluence is within that range. Fourth, change to line chart to check our marking is correct. Fifth, change back to candlestick and monitor price has to be within the confluence of trend line and entry point. Like as I said earlier, price cannot linger so far away from the entry point and also the confluence of the trend line, else it will become a very high risk setup. Alright, so now let's look at the example in the chart. This is for a buy setup. As we can see here, there's a QM shape. Okay, there is this one, the left shoulder, low high, lower low, higher high. So first we draw the entry point using the horizontal line, which is this. Okay, after we have drawn the horizontal line, then next we need to mark the zone. This zone is just marked from the body until the shadow as a reference. When the price comes back in, at least it is easier for us to monitor. Thirdly, then we can draw the trend line. The trend line, we can just mind the T-bar style. It doesn't have to be accurate. It doesn't have to be from a point or anyway, just as a confluence of price, you see. So this is the first drive, second drive as a confluence. Okay, then the fourth one, we change to line chart. Here we go. So our marking is correct. So this is the lower high, lower low. And then now we anticipate that price will come back within this confluence area and not after this trend line area here or any further. Okay, so fifth, we change back to candlestick and monitor the price. And like I said earlier, we have to monitor that the price has to be within the confluence of the trend line and the entry point. So now let's have a look. There we go, you see. So the price is within the confluence of the trend line. At the same time, it is the same area of our entry point, and price reacted this QMC and continue to go up. Next, let's have a look at the sell setup for QMC. So here there is one sell setup QMC. As we can see here clearly, there is a high, low, higher high, lower low. Price hasn't come back to this area, so let's mark it first. First, as usual, we mark the horizontal line. Secondly, we mark the zone for easy monitoring when price coming back to this entry point area. Third is only the time that we draw the trend line after we have found the setup. Okay, so it must be within this confluence around this area here. Fourth, we change it to the line chart to check our marking. Is it correct? Yes, it's a high, low, higher high, lower low. Fifth, we change back to the candlestick and monitor that our price has to be within the confluence of the trend line and also our entry point. Okay, so now let's have a look. There we go. You can see that the price has reacted towards the confluence of this trend line and it also at the entry point. So this is a very good QMC setup. So how do we use confirmation for QMC to lower down our risk of entry? So first of all, as always with all the setups, it must be a multi-time frame analysis. This is the main key. Second thing, we must always look for the engulfing candle at a higher time frame as our confirmation, and to make sure that the setup has to be at the body of the engulfing candle. Please remember guys, do not and never the setup be at the wick or the shadow, or else the risk is very high. You will increase the risk and this will be very, very dangerous. So let's move on to the chart again. Oh yes. Okay guys, we are back to the trading view chart. As I can see here in this pair GBP AUD on the 1 hour time frame, there is a potential QMC. Okay, so let's have a look. This is our structure, our high, low, higher, high, lower, low. Let me mark the structure so that you can have a clear view of it. So this is our left shoulder. Okay, our left shoulder, I will mark it as a high. LS is the left shoulder, so mark it as a high. So we have another here is the low. Then this is the higher high. This is the lower low. Okay, so now we have the structure. What we would want to do now is to, like I said, we mark the horizontal line. So first we mark the horizontal line, okay, at the entry point with the left shoulder or the high. Next we mark the zone. So we draw a square box from here up to the shadow of the left shoulder. As long it's easy for us to monitor when price come back in this area, then we're able to see it clearly. Thirdly, then only we draw the trend line by T-bar style. So how do we draw the trend line? And sometimes this, a lot of people said that this is very subjective. Yes, it is very subjective, but it doesn't matter as long as we just draw a trend line. It could be like this. It could be like this. Alright? It doesn't matter. Just draw as a T-bar as long as the price is within the confluence. Now we want to make sure that the trend line, the second drive, it always has to be the QM head. Okay, the high for this case. So once we mark that, the fourth one, we will go to the line chart, have a look at the line chart. Yes, we are correct. We have the high, low, higher high, and lower low. Okay. Fourth, we come back to the candlestick. Now, how do we find a strong confirmation in this case? So what we should do, like I always said, we have to do the multi-time frame analysis because that is the key. That is the key to lower down our risk. So let's change this to H4. So after we change to H4, we can see that this price is at the bearish engulfing of the H4. The setup is within the body of the bearish engulfing. So this is considered as a low risk. So we are on right track. Very good. Okay. So what we should do now is go back to our H1 and we wait for the price to react. Okay, as we can see, so whether this trend line or whether the trend line, the price has react towards this left shoulder, our QMC setup, and continue downwards. Therefore, this QMC setup is very strong. It's because we have multi-time frame analysis, which is the H4, we have the bearish engulfing at the body. Secondly, we have the trend line as a QMC. This is a continuation setup. It has lowered the risk as well. So the whole setup is a low risk setup. So we are safe. And we can see that this price has react more than 140 pips. Okay, guys. So this is a very, very good setup. So I hope that's all and really can help you out on how to identify this QMC. Plus we use the higher time frame as our multi time frame analysis to find our confirmation. Okay, guys. So we're back here. So what you need to do right now is to do 5 screenshots of the QMC assignment. Doesn't matter whether it's a buy or it's a sell. Remember, guys, your assignment has to be a QMC where the head of the QM is on the second drive and entry at the third drive, and try to find a confirmation at the engulf body on the higher time frame. So once you have this, draw your assignment, keep it in a folder, and I'll have a look later at the end of this course. See you at the next class.